This is your sector updates for Wednesday night. Let's start with the XLF, the banking sector, although the biggest company is not a bank, BRK.B. Okay, looking at this, it's almost like the entire market. It's looking to bust out. They have broken out from their summer prior fails of this year, and they are attempting to break out of basically the year, which will put them in open air. There might be higher levels, but none recent. So the bulls are in complete control here. The bears need a miracle. Now, the words from Powell and the actions from the Fed and their posture on what they're going to do with rates higher longer will directly affect the action in this ticker after tomorrow. The Fed will give us their decision and their posture, and you can rest assured that the rates will move up or down. We don't know. This one will move accordingly too. Sometimes it's moving with rates, sometimes it's against. So it's a tough one for the bears here. I would not be short this ticker. Shorter term, they're buying every dip almost to no end. I wouldn't fight it. Complete opposite story on the XLE, the energy sector. Now this one is basically concentrated in two tickers. Two large companies make up 40% of it. We're looking at Chevron, Exxon. The good news is it's fallen into a pretty well-defined base. So I'm going to add it to my watch list. We've traded this a few times. It's approaching levels that are support zones, and that's the important part. It's a zone. It's not a hard line in the sand. I could go long if I'm careful and if I have good stopping abilities. The only problem is that the market itself is at all-time highs, and this one is struggling to find support. What happens if the market has 2-3 bad days? This one might end up at 79 or 78. But if I place my trades well, maybe a calendar or something that helps me be bearish in the short term, bullish in the long term, I'll probably use that. The XLU is also rate sensitive, so it might react one way or another to words from Powell. And this one, the rebound was fantastic, but I think this is a place where I would exit. I wouldn't enter. Why? It's going into a prior fail. 64, if you look left, has been very pivotal. It was support several times, and then complete disaster. And then now they've recovered the disaster. It's not usually a starting point. Whoever was stuck in here from that disaster zone around 64 is going to say, thank you, I will take this opportunity to get out. The home builders, I don't get it. We discussed it today in the live. What is happening? I thought real estate was dead. It has overcome its last failure from the summer. It's almost like the XLF, and it's coming into, actually check that, it's better than the XLF because it's also broken out from its failure before that. It is above 2021 levels. Pretty scary conversation there. To be short, I don't know if I would be, but if you twist my arm, I would buy a put out in time and sleep on it. So that's the XHB. It's on my to short list, but I haven't grown enough courage in order to short it. Once it breaks, it's going to be painful, but I don't know what's going to trigger it. Since I don't understand exactly why the home builders are running, I'm not inclined to put some money at risk on the short side. If you do know the industry, then you might be able to have more conviction than me. The XLB, the material sector, is going into a prior fail 3 times over. Huge fail up here in July, another fail a little bit later in August, and another fail recently, and here they are at it again. Now, theoretically speaking, I would reshort here. If I'm not short, I would attempt to short it because it looks like from the daily chart, it might revert lower to 80 in several steps. Now, if it breaks out of these failures of 84, the target could be, I don't know, 89 or more. However, I wouldn't stop out until it goes above 86, personally. So I would have to short it slowpoke and responsibly. When I say short, for the record, I don't mean sell the stocks outright. Short, traditionally. Responsibly, the easiest way to short is to buy a put or buy a put spread or sell a call spread, not a naked call. Covered calls are fine. Okay, so I would be inclined to be bearish on this one with a stop. XLC, I think it goes by way of the market. It has support at 68. It has backup support at 66. And of course, the whole zone below 65 is super strong support this quarter. Okay. Now they only need to go above this white dash line. So 71.60 would give you a breakout into, I don't know, 76. But then you have to deal with all of these jagged lines. Now, these are old enough from January of 2022 that they might not matter as much. So if the market is rallying, this one is in a breakout. They broke out from these prior fails and they established footing and they're coming out. If they go above this point, that breakout is going to finish itself. And 76 is doable, as is 80 and 81. I wouldn't buy a call thinking that that's where it's headed, but I definitely would. This is not a bearish chart on this time frame. The XLK today was amazing. I think we can thank one stock for that, and that is AVGO. It's on fire. I think another stock stepped up today as well. So there's nothing to short here. I have no reference points. This is an all-time high. It's out in thin air. There's no need covering it. If you're long, enjoy it. Don't forget to lock profits. The XLI, this is where one would short it. Why? It's going into a prior fail, a massive fail. You short with a stop. That's what I would do. How do I set a stop? That depends on personal preference. Above here, there's nothing. Is this an all-time high too? Wow. How is that possible? It looks like. Yes, it is. Woo-wee. This market. So you can short into an all-time high, but once it breaks into an outside of the all-time high levels, what are you shorting, right? So you don't have anything to reference. Let's go deeper. Maybe we can find some sort of a pattern. No, any dip into 109.40 will find buyers. So if it dips into 109.40, they're going to find buyers. If not, 109. That's a short-term comment. The XLY, that is the discretionary. You'd think in a recession, as they tell us we have going on in the US, this would be going down, down, down. It's not. But it's also going into a prior fail. So if we go up to a daily chart, this one is a little bit more bearish, less bullish than the XLI. So we're going into a prior fail, prior fail, prior fail. This is not an obvious point of entry. That's a NOPE acronym, N-O-P-E, not an obvious point of entry. Now, if it dips to 166, it might find buyers, but I bet you if it goes to 166, it might end up at 162 in a series of two steps. You dip, you bounce, and you dip lower. All right, so this is my take on this one, not as aggressively bullish as the other one. The broadening wedge, this one here, the broadening wedge, whatever you want to call it, if it breaks out to the upside, it's gone to higher highs, of course, but it doesn't look easy. The industrials look easier. The consumer staples are the like, you would think that these would hold up in a bad economy, but this is also proof that we don't have a bad economy. Like Pepsi and Coke were falling out of control. Now they're recovered, kind of like the XLU, I believe. They recovered their neckline, but this is not an obvious point of entry. 72 maybe. And then it's going to dip back. How deep? I don't know. Back down to 70, maybe 69. And that would be a dip I would buy. From here, I don't think there's an easy trade. A breakout from 71.30 might get you 72.60, maybe 72.50. XLV. Going into prior fails, multiple. The range is wide. It will follow the markets. We traded this for the long side down here. I would not trade it for the long side up here. The bearish pattern here would be negated if we go up to 136. But this red thing you see on my screen that says maybe you don't want to be long, maybe you want to be maybe owning some puts. I don't know if I would. I don't have a reason to own puts. But if it gets up to 134 and 135, I might try a credit call spread. This is a bunch of stocks, so I don't have any headline risk from one stock taking off. They kind of trade in tandem, like together, but not a single stock headline risk. All right, the XBI is definitely an exit spot for me. 82, 83, there are a lot of sellers. 81 might be it. They could take out 81 and look like they're going to 90, but I think they will fail at 84. So it's not I would not hold calls based on this chart. Okay, the XLV and the XBI, they're slightly nuanced, so make sure to look at the components. They're not the same. One is healthcare, one is not biotech. So they're not the same, biotech and healthcare. So a dip to 76 or 75 might be interesting because you do have support down in 76 to 75. So a dip might be interesting. A curl back up would be the challenge, but therein lies the opportunity. We have a shoulder, we have a giant head. Why not dip a little bit to form a shoulder and then break out with that? This might take a month or two, maybe 3 weeks. We'll see how that happens. Of course, if the market rallies into all-time highs and the S&P is rallying 20, 30 points, this will rally as well. All right, hopefully this gives you a little bit of coverage on the market from the ETF's perspective.